Well, it is about time that we talk about a bit more about this voting situation. So I want to start by saying that I am needing some correction. According to Tesla Boomer Mama, the auditors do know who has voted, and they can keep Tesla up to date on that information, which of course is super helpful. So in case you're not up to date, this morning we talked a lot about this vote that's going to be taking place with regard to Elon Musk's compensation and also with regard to the move to Texas, having the corporate headquarters moved to Texas. Well, we'll talk a lot more about it here just in a second because confusion continues to reign. And this is a very, very important vote. And it's pretty much all that people are talking about in the community today on X. So let's start here with more of what Tesla Boomer Mama has to say. She says that the Elon Musk compensation plan only requires a simple majority of all shares outstanding, minus or less Elon's and Kimball's shares. So one way to look at this is every failure to vote is the same as a no vote. Now, that doesn't actually, it is technically true. Okay. So if there is 100,000 votes outstanding total, and you take out Elon's votes, and let's say Elon's and Kimball's votes, and let's say that was 30,000, and that will leave 70,000, then you have to get a majority of that 70,000 or 35,001. If you don't vote, that means you haven't contributed to that 35,001 that's necessary to get there. So it acts technically like a no vote. All right, now on the move to Texas, by the way, and we've heard this morning that this is a hard get, and that's why Tesla, the board of directors, is spending money, spending time, spending energy to try to get people to get their votes in. Now, the move to Texas is a completely different story. In this particular case, Tesla Boom Mama believes that all of the votes are going to count. So your 100,000 total votes, you would need to get 50,000, and Elon and Kimball are not going to vote. So the 30,000 would come out of that number, again, acting like no votes, or the other way to look at it, you need 50,000 out of the 70,000 remaining. Now, those are not correct numbers. It would be more like between Kimball and Elon, they probably have about 15%. So let's say 85,000 if you want to use round numbers to try to figure this out. So 85,000, you would need 42,500 of that 80. I'm sorry, you would need, I almost blew it. So you have 100,000 votes. You need 50,000, but 15,000 of those are not voting. So now you're going to need 50,000 out of 85,000. That's the way to look at it, or well more than half. So the move to Texas is harder to get than even the Elon Musk compensation plan. Anyway, so Sawyer Merritt has been a little bit confused on this, even made some phone calls to some brokers asking about whether a failure to vote would be like a no vote. And it is, again, not technically, what he heard from the broker is no, that's not technically true. But in fact, it is, it's the same thing. Okay. It's the same thing as a no vote. All right. So this is Randy Kirk, by the way. Please hit like and subscribe and notify. We will have Larry Goldberg back tomorrow morning. So you're going to want to hear from Larry. You haven't heard from him on my show, at least for several weeks. And I'm sure Larry will have a lot to report. And then also, I want to remind you about Cybertruck bottle openers. I haven't been in town, so I haven't been pushing them. Maybe you forgot about them. Maybe you've got a Cybertruck now. Maybe you've got one coming soon, or maybe you have a friend that's got one, or maybe just think that people are talking about them, which they are. And so they continue to be $25 for one and $45 for two and $65 for three, et cetera, et cetera. All that information is down below in the description. So you might want to check that out if you'd like to get some. Got plenty in stock. Happy to ship them out on Monday or maybe even tomorrow. We've got this from this morning in the X on X. It's always so hard to figure out how to call all that. It's not on Twitter. It's not anyways, on X. Jan Leakey, OpenAir's head of alignment and super alignment, not sure what that is, has just resigned. He wrote the following. OpenAI has had about 7 different people now resign, a major, leadership. And again, Tesla's had lots of people resign too. And there's always a lot of speculation about what's going on. But in this particular case, Jan Leakey has given us his opinion. He says, I have been disagreeing with OpenAI leadership about the company's core priorities for quite some time. In fact, until we finally reached a breaking point. I believe much more of our bandwidth should be spent getting ready for the next generation of models on security, monitoring, preparedness, safety, adversarial robustness, super alignment, confidentiality, societal impact, and related topics. These problems are quite hard to get right, and I am concerned we are not on a trajectory to get there. Over the past few months, my team has been sailing against the wind. Sometimes we were struggling for compute, and it was getting harder and harder to get this crucial research done. Building smarter than human machines is an inherently dangerous endeavor. OpenAI is shouldering an enormous responsibility on behalf of all humanity, but over the past years, safety culture and processes have taken a backseat to shiny products. We're long overdue in getting incredibly serious about the implications of AGI. We must prioritize preparing for them as best we can. Only then can we ensure AGI benefits all of humanity. OpenAI must become a safety-first AGI company. Now, this is being written after Ilya Sutskever. Anyway, he also resigned earlier this week. He was one of OpenAI's co-founders and was a key to the attempt to oust CEO Sam Altman last year. He was working on, and then mentioned is that Jan Leakey has been working on keeping AI safe. This is a lot of turmoil for a company that's already had a lot of controversy, and a lot of that coming from, of course, Elon Musk, who believes that they are way more interested in shiny objects than they are in safety. This is going to continue to be a very major issue. I bring it up because Tesla is now an AI company, all right, with robotics as its primary products. So therefore, I'm going to be spending more time on AI and more time on the competitors in the AI space. All right, this from Market Watch. The numbers. The leading indicators for the U.S. economy fell in April for the second month in a row and pointed to serious headwinds to growth. This is, of course, the index of leading economic indicators. It has been a major place where people have gone to try to get an idea of where the economy is going. The index sank 0.6% last month, according to the Conference Board. The leading index is a gauge designed to show whether the economy is getting better or worse. Economists polled by the Wall Street Journal had forecast a 0.3% decline and got a 0.6% decline. The leading indexes had risen in February. That was good news, but that was the first increase in 2 years. The third longest negative stretch ever, but now with that 1 month exception, it's reaching even greater and greater lengths. Now, this article goes on to say that the other 2 times the index experienced such large declines, a recession ensued. But the pandemic and its aftermath has partly severed typical economic patterns, and the U.S. has continued to grow at above average rate. That is exactly what we've been reporting in this particular spot for the 14 or 15 months that we've been in business. And we continue to believe that the boom bust economy that we went through had a huge impact on recessionary trends or on lots and lots and lots of things that you would normally expect that would be pointing towards the economy in trouble, and yet we haven't had the trouble that was expected. So the article from Market Watch goes on to say the leading index declined mainly because of weaker business orders. That's a major thing. Fewer permits to build new homes, which we reported on this morning, and a decline in stock prices last month. Now, the stocks have rebounded, it points out, to fresh record highs, but during the month of April, you've got to do all the indexes, all the items in the same month. it was down. Big picture, according to Market Watch, the economy slowed in the first quarter after heady growth in the second half of 2023. And it's unlikely to speed up much until inflation tape. Let me say that again. Something happened in my mouth. It's unlikely, the market, the economy is unlikely to speed up much until inflation tapers off and the Federal Reserve cuts interest rates. I'm not sure that's true. I say that interest rates are not that high. I don't think they're having that much impact on what people are making, decisions people are making. Yes, probably because people are not used to these high interest rates because they went up so fast, but ultimately people will do the workarounds. What's really going to impact the economy is whether the consumer runs out of money. We're going to talk a lot about that in a few minutes. It says a recession also appears unlikely. Though seems unlikely. A strong labor market characterized by steady hiring, low layoffs, and low unemployment means people have the means to keep the economy growing through spending. Looking ahead, while the index no longer signals a forthcoming recession, I don't think they said that, they still point to serious headwinds to growth, according to senior manager of business cycle indicators at the Conference Board. Indeed, elevated inflation, high interest rates, rising household debt, and depleted pandemic savings are all expected to weigh on the U.S. economy continuing in 2024. All right. Market Watch also reported April asking rents across 33 major metro areas rose 1.1 from a year ago, which is the first such increase that Redfin has seen in more than a year. And the median asking rent now is $1,648. The biggest rent increases were seen where? They were seen in the Midwest, the report found, while the biggest declines were found in the Sun Belt and in Seattle. Rents are only up 1% nationally, and that's mostly because less affordable rental markets are getting more expensive, which is bound to happen. Okay, let me explain what they're saying here rather than reading it. What's happening is some people are moving out of San Francisco. They're moving out of Phoenix. I'm sorry, of some parts of Las Vegas. They're moving out of Portland and Seattle, where rents are extremely expensive, and they're moving to less expensive areas. And in the course of doing this, what happens? Well, then you have too many people in the inexpensive neighborhoods, and now the rents go up there. So we have rents going down in some expensive places, rents going up in inexpensive places, but overall, a 1.1% in a single month. 1.1%. That is a 12% per year, 12 point, so a 13.1, 13.2% increase year over year. That is not the way we want to see things going. This is extremely bad news for what the Fed is hoping for in terms of inflation coming down. So what are we going to do? So rent, the final note here, rents are only up 1% national. Oh, that's okay. So what I'm going to do next is I'm going to give you the economic numbers for today, along with the after hours numbers for Tesla and yeah, that's all. And then, because there's no pre-market, of course. And then I'm also going to restate my comments this morning about the economy, about markets, about Tesla, and about Tesla, the stock. I had a number of comments that I talked about this morning, but if you weren't on board this morning and you'd like to hear what I had to say, I'm going to do that in a minute. I'm going to just be an absolute repeat, just going to give you exactly the same scripting. And so you may want to listen to what I'm going to say about the economic reports today, or what happened on Wall Street today. But maybe you won't be interested in me repeating what I said this morning. So just a warning. All right, so let's go ahead and look at it. We got Tesla in the after hours. After going up 262 during the day, a very good day for Tesla. The stock is up another 9 cents in the after hours. Overall, we saw the Dow Jones up 134 today. We saw the NASDAQ down 12, and we saw the S&P up 6.17. We had the Magnificent Seven split with NVIDIA down 18.8, a strong down day. They report next week, so that might be some indication of how people are leaning as we go into that reporting period. We've got the Cathie Woods mostly up this morning. Now let's go into the bonds. We have the bonds ending up the day up 4.7 basis points. So a strong day for the bonds on the 10-year. The 2-year up 3.6 basis points. And the 2-month is continuing to not trade for some reason. There's an asterisk next to it. Don't know what's going on there. All right, let's go on to oil. We have got by the way, just on bonds, obviously those bond rates going up is that says that the bond buyers are saying they're now worried about inflation again. All right. So maybe this rent number, maybe this okay. The biggest thing we don't want to see happening is stagflation. So if you got rents going up and you got the GPA, the leading indicators going down, more indication of stagflation. That is not at all what markets are going to want to see. All right, let's look at oil. Oil up 77 cents today, and now at $80 even. So this is a continuing trend, moving up, moving up. We've got natural gas up 5.73% at $2.63. We were at under $2 just 2 weeks ago. Big move in natural gas. We have got gold up 34 now at 24.19, pressing up against all-time highs. Let me just double check real quick. What was that all-time high? Wait a minute. We might be, I'm looking at the wrong thing here. Probably, let me look here. Yeah, we're right, might have hit all-time highs today at some point. So we're at or about at all-time highs on gold. We have got silver up 6% today. We have got copper up 4.21% today. We're starting to see a rally, at least in these commodities. The commodity index overall is high, but that might be because of gold, silver, copper. Maybe overall, I'm not sure that we could say that the rest of the commodities are going up that much. Anyway, copper up 4.21 at $5.08. That also marks a big high water mark for copper. We've got the dollar mostly flat. We have got Bitcoin up 1565 at 66,855. And that pretty much tells the story of the day. Now, let me repeat what I said this morning for those of you who might have missed this morning and would like to know what my feelings are on the economy, the stock market, Tesla fundamentals, and also the Tesla stock. So I'm saying that the economy is humming along, but it's not going to get the productivity boost that we thought was going to come from the open AIs and all the other things that are happening with large language models. Those are going to come later. It's going to be more, maybe over a longer period of time, but we're not getting that boost. That was proven by the productivity numbers that came out a week or so ago. The consumer is out of gas. The government spent a lot of money in the third and fourth quarter, a big increase in how much they spent in the third and fourth quarter last year. They're not going to be doing that in the third and fourth quarter this year. That is not going to be there to help the economy. It's not going to get saved by the government this time. So I'm still at 30% chance of recession. Those numbers that I just read you are not helping my numbers. I'm getting more and more. It's like 30% leaning towards 40, leaning towards 50. But right now, I'm still at 30% chance of recession in the third and fourth quarter. Certainly going to be flat, might be down one or both the third and fourth, maybe even into the first quarter of next year. If there's, we need to hear more about what's happening with retail right now. It just doesn't. Walmart, their numbers were fine, but that could be because folks are not spending the money at more expensive places. They're going to Walmart. And that's what kind of Walmart said, is that they're getting some of that money from the upper middle class that normally would not be shopping at Walmart. So spending on retail, housing, autos, that's a big piece of the total market, like half or more of where all the money goes, okay? And all of those are looking a lot soft right now. The stock market, I think the stock market is stretched to breaking. I do not buy the argument that there's not enough cash on the sidelines, even though the amount of cash right now on the sidelines held by institutions is at a low level. But there's lots of money on the sidelines that could come in from other asset groups. I do believe that we're stretched. And I do believe that the smart boys are already getting ready to take their profits. I'm seeing a 10%, I believe there'll be a 10% correction at a minimum within the next 90 days. I think it is very likely going to go to 20%, but I also believe that the markets will be up by the end of the year. Why do I think that? Number one, I think you're going to have a change in government, and the change in government is extremely good for our markets. As almost 100% of the time, does the market go up if there's a change of government. So that's why I think that's one of the reasons I think we'll be up by year's end, but I think it's also going to be a bounce, a response from that 10%, 20% down, and then a rapid reacceleration. There's not going to be any help from the Fed either. There is not a chance in the world that the Fed, after a 1.1% increase in rents from Redfin for 1 month, there's not a chance we're going to see the Fed cutting money this year. Well, if it's going to happen, it's going to happen in November after the elections. Tesla fundamentals, they've shifted to FSD, Robotaxi, and Optimus, maybe to the overall AI and all of the capacity that Tesla is building in buying Dell computers and AMD computers and compute capability from NVIDIA. I mean, just huge amounts. They're fully intending, it's clear, to be number one or number two in terms of total capability to compute AI type product. The rest of the company is poised for absolute greatness. So it's not just about AI, not just about robotics. I think it's going to be extremely exciting in all the sexy cars, the Cybertruck, energy storage, semi, all of it's going to be amazing. But that's not what the community is talking about right now. The community is talking about robotaxi, and more robotaxi. And so that's, I think Dan Ives and some of these other folks, they're beginning to get it. They're beginning to talk about it too. So the narrative has shifted, and all eyeballs are on FSD 12.6 and August 8th. Well, so too the stock. Sure, between now and 8/8, the stock is going to go up and down for all kinds of reasons in terms of whether we hit certain numbers on July 2nd or not, and what the profits are on July 20, whatever, when the earnings report comes out. But I think the stock is going to trade in a range. I don't think it's going to go down below 125. I don't think it's going to go above 235 between now and 8/8, unless it's right before there might be some FOMO, there might be some run up, trying to anticipate what's going to happen on 8/8. So we could even be looking at, running up towards 300. If we get 99% confidence that FSD is complete, or if there's an actual rollout, if Elon announces that, in fact, robotaxi fleets are going to be starting to, the apps are ready and people can start turning their cars into robotaxis, even if they have to be supervised for a short period of time, then the stock goes to 700 by year end and probably 1,500 next year. And then if you add Optimus, if Optimus starts shipping, I say the stock, if we get robotaxi and Optimus, I think the stock is over 2,000 by the end of next year. But that's just me, and that is not investment advice. That's just my crazy. I have to stay wild and crazy. But those numbers shouldn't be shocking. Kathy Wood thinks it'll be over 2,000 just on robotaxi. I'm adding Optimus to get to that number. All right, that's all I got for you today. I will be back tomorrow morning with Larry Goldberg. That's going to be exciting for sure. It has been great talking to you.